Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. Today is Monday, the 8th of December. I'm joined by Dave Lukas here today. And we are in the calm before the storm, if you will, or the drawdown before the storm. Coming up on Wednesday, more than likely we're going to see Chairman Powell probably bring out the rate cut machine, and then who knows what happens after that, because a lot will depend on what he says. But
Hmm.
Dave, what do you see happening into the end of the year? Where are markets going to go from here?
I'm sticking with what I've said the last few weeks. I think, we are Fed week. I think the Fed's going to cut. Powell may come out and kind of be hawkish in his statements and stuff like that. I don't
Yeah.
know if that's going to matter as much anymore since he's just not far from being out the door to somebody who is going to be very dovish and cutting rates. I think the committee itself, though, has moved to more rate cuts, so they override him on that. So he may job on a little bit, but I don't know if it's going to be as big of a deal anymore. But the thing we talked about the last couple weeks is we got the daily charts. They've gone into exhaustion into this week. Expected some of a pullback into the Fed just to charge the daily charts back up. We got very severely charged up weekly charts. I think we get past the Fed maybe into Friday, starting next week. We see the daily chart start to release higher in its energy. That kicks off the weekly trend, and we are off to the races through the end of the year, hitting 7,000 plus on the S&P. And then, like I said, as we get into Q1, whether this happens in the span of a few weeks or it happens over the course of 4 to 6 or weeks or longer, once that weekly chart is exhausted and that monthly chart's exhausted alongside of it, that is my clue to kind of go risk off, let things let things happen, and then look for a nice correction, maybe 10% or maybe even a little bit more, and that'll be the best entry point for 2026 because I think we'll be off to the races again from there. So that's how I see it over the next couple months.
What would have to change for you to alter that?
Um, It would have like anything, it has to be something that comes out of left field that's really not priced in. Um, so something that just really, but it has to last too. It can't just be something that's like like we saw with tariffs last year, right? We were, that's a policy, kind of thing that was overcome within about 30 to 60 days. Something that really changes it. So, China moving on Taiwan. That's something that, could really throw things into a tizzy. Um, Something bigger with, the structural market itself. So, do we see some very big structural changes, which I don't see on the horizon, especially into an election year. So I think that at some point we'll pay the piper for the speed of which we're increasing the debt, right? We're going to be at 40 trillion here real soon. And we're going to keep that's going to keep going. It doesn't matter who's in charge, it's going to keep going. So at some point that's going to come into play. But the only other thing I could see is if Japan really blows up. If Japan just loses total control and that whole thing just blows up, then that's a big thing that structurally hits markets around the world. So
Yeah,
as of now, it seems to
they're
be in
threatening
check.
to raise rates in Japan. Is that right?
Yes. Yeah, but if I mean, they're losing control, but if they, can't keep control by even doing that and stuff, and that thing really gets haywire and goes out of control, then, that has an impact because of the carry trade. So for those of you, we talked about it before, but the carry trade is where for years, for many, many years, like it's been the basis of markets for, gosh, the last almost 2 decades, is because Japan kept rates at zero, right? People, investors would go borrow from Japan at 0% interest and then invest in US markets with it. And so if you're borrowing, at zero, but all of a sudden rates start to go skyrocketing higher, even for Japan, 1.5%, 2%, very quickly that starts to pinch all those things. And you have to sell out of US treasuries and cover and do all these things to, you know, effectively unwind your risk. And so that's your structural, kind of challenge that could happen. So as of now, it's lurking. We had a flirting with it last year in August that sent markets down to a 10 plus percent correction very quickly, but it was resolved. So we'll see. But as of now, I do not see that actually, getting to that level. So I think it's dip now, run through the end of the year, get to exhaustion on the larger time frames, take that corrective pullback, that is warranted at that point, and then run through the election because it's an election year.
So we have some of the weekly energy starting to come out now on the
Hmm.
S&P due to this, 300 some point rally. But, most of this is still just there's no trend really
Hmm.
since the October timeframe. So since the beginning of October, we've had essentially no trend on the
Yeah,
S&P.
we've gone nowhere for like 3 months
Yeah.
almost.
So this is why we have tons of energy. And we've already, right now, what we're left with on a 9 period is this whole move from April all the way through December. So right now we are at literally levels of, exhaustion here. Now, one thing I keep playing with is looking at this on a 14 basis,
Hmm.
looking at the monthly chart on a 14 basis, and it doesn't look quite as horrible at that point. We've had much stronger moves over a
Yeah.
longer period of time, which is what takes the 14 down. So the monthly chart may be still working off of a longer time frame, which is why to me this is why we haven't seen more volatility. So what the
Hmm.
S&P only got down like what 5.7% on this
Yeah.
move so far,
Yeah.
and the Nasdaq was about what 8.9, something
Yeah.
like that. So we haven't seen any kind of 10% reaction
Well,
so far.
and if you look at those two charts, weekly and the monthly, in context next to each other, you can see it. Like, okay, let's say the 14 days right, and there's another 10 plus points of energy in the monthly chart. You got a weekly chart that's ready to go. It lines up perfectly with the weekly chart, pushing that higher, burning out the rest of that monthly chart into exhaustion on both those, and
Mm-hmm.
then that's when you get your corrective move.
Yeah. So for those of you
Look at
that don't
that.
know what I'm talking about in terms of 9 and 14, what I for years and years and years, we always used a 14 period sample for determining the amount of energy in the market. So you can think of this as like a fuel gauge, like full down here and empty down here. Now, when it's full, this is where we have a propensity to trend from there. When it's empty down in this area, this is where trends go to die and maybe even reverse. So we're always trying to figure out are we at a tipping point? And the monthly chart is close to a tipping point regardless of how we look at it. It's in a dangerous point where we start to see a lot of volatility typically from this. So a lot of times, so for years I ran with a 14 number here. And then what happened was in 2022, the 14 stopped working. And what I found is that during those corrective markets, we just started moving faster. Markets started moving faster, not only to the downside, but also to the upside. And so we have run with a period of 9 really since that point, and it does a better job of understanding the market. So now we have this question, is it still running a 9 or are things slowing down right now? And that's what we have to figure out because right now we're in a danger zone on the 9, but 14 has a little bit more to work with. So to Dave's point, if we do break higher from here, this will be a sign that we may be on a longer time frame sample. We may be on a little bit longer leash, so to speak.
Hmm.
And we found that same thing with gold. Like if we look at
Yep.
gold, we found the same thing with that. Like gold is just, on stupid levels. But it makes more sense if we run this on 14 on gold because 9 we ran out of gas in no time at all on some of these
Hmm.
trends. And right now, so I would say gold and silver are probably running on a 14 sample. So let's look at SLV really quick here.
Yeah,
So
and I think you can find that, like I've found too, that the shorter time frames like the daily, the 9 works better. And that's because of zero DTE. A lot of this changed because of the advent of zero DTE. You think about 2022, what changed, what came in, we started to have literally daily options. And so things began to move faster. The swings in the markets changed. Like, when Doc and I started, we're doing this years ago, when we started and for a long period of time, there were only monthly option cycles. So the 14 worked really well for that. Then it even went to like weekly option cycles. And the 14 worked well. But once you get to every single day, it speeds things up. Markets move faster that way. So in the shorter time frames, the 9 is really done well. In sometimes on the longer term time frames, going back to the 14 gives some perspective. But the 9 overall seems to be the way to go for the markets these days.
I'm just answering a question here. Brewhead was asking me like what led me to start experimenting, and it was the fact that in 2022 nothing made sense anymore. Like
Hmm.
we'd have these big weekly moves down, and it would never go into exhaustion before it reversed, and so we were constantly kind of on the left foot, you know, kind of being backed up on the market
Well,
during a
we're sitting
bigger
there going
move.
like, man, this thing, should be releasing now. This is, something. It's delayed, or it just, that type of stuff caused us to say, well, let's look at other time frames and see if they line up. And we hit the 9, and the 9 was like, okay, exactly operating how, we would expect it to. So that's, oh, we looked at, we looked at 11s and 12s and things like that, and looked at it, but the 9 seemed to have the best correlation. So that's why we
So,
settled on
so just briefly here are the weekly trends that we saw, and these were some big trends. And what you'll notice is that each one of these never got anywhere close to exhaustion before,
that. Right.
and these were strong moves too. Look how strong moves these are, and we never got anywhere close to exhaustion. And I was like, man, something's wrong here.
Hmm.
This is wrong. It's just not fast enough. And so through trial and error, and this is what you find with trading is not an exact science. There is a degree of art that goes along with the science to it,
Hmm.
right? So when all of a sudden now it made sense because we got down into exhaustion, and then we had a counter trend move, and so a period of 9 is basically what we've been running with for the last 3 years. Okay, let's see some other questions here. Um, yeah, I think I got your question, Brewhead. So another one was just about the gaps that we have. So we watch the gaps pretty carefully here on the S&P in particular. I don't really do that much in terms of the Qs or anything like that. To me, gaps are mostly an S&P thing. And we do have some down gaps. We have one final up gap, and this is going to all change as of Thursday, Friday, because we're going to have a contract roll. So all these gaps get shifted around
Yeah.
and get moved, and to some degree, people forget about them. But we'll shift these around because of the contract roll and the cost of carry and everything gets shifted around. But yeah, Brewhead, that is correct. Yeah, you can't, the what we get into what we get into sometimes and with trading is because something works for you over a number of years, you get used to doing the same thing over and over and over again, right? So we're all creatures of habit. We're
Yeah,
human
Doc and I
beings.
are actually just talking about that over the last week. And one of the things that, for us that we have looked at is like increasing our edge even further. Like, how do we do that? And it goes back to like, well, then how do we're going back to like, how do we pick our candidates? Like what other things should we be looking for? And some of that is some of that's being a lot more patient too, becoming better quote unquote stock pickers, if you will. And so, like for example, like one of the things we've honed in on that has historically through any type of market historically held true is a what's called a big rounded base. And so anybody that follows guys like All Star Charts or JC Peretz. He's famous for this. He'll put out charts that have like a big looks like a big rounded base, like a smile that he's pointing out to it. And that rounded base is kind of like showing that this thing is really bottomed and starting to get ready for its next major run. in the upward direction. And so, for us, it's like looking at like what are those stocks that we can hone in on that we can do a lot of our different trading strategies on, as well as employ new ones. And so, Doc, I don't know if you want to talk about that a little bit, but I think it's important for people to understand.
Well, once you see them, you start to see them everywhere. So if you think about something like this, we had almost a cup with handle here. Again, the corrective move in 2022 created this nice rounded base, and then we were off and running. Now, this is not a rounded base. This is just a V bottom. So you have to be discerning on these types of things. But we've looked at a lot of opportunities. Like one in the past was Palantir, and you have to realize what a long, and probably even on the weekly chart, this looks. Let me go to the weekly chart here because this one is so long. It's almost not enough time. Hang on. Yeah,
Google was another good one too. You can show them that next.
yeah. Let's here. Let me reset this. So Palantir. What we want you guys to be doing is to be looking for the stuff that's down here and breaking out. See, the problem is that nobody is looking at this. Nobody's looking at these when they break out. How would you like to get Palantir at 40 instead of be chasing after this noise up here at 200? And this is where you get this is a late stage base. A late stage base is always going to be, think of it this way, like you have this, very tall or heavy weight. So you got like 1 ton of weight up here that's being held by a long skinny pole. And so you're trying to hold this up. And the problem is that if it gets going in any one way or the other, it gets unstable and the whole thing comes crashing down. So this is what you want to do. Something that's close to breaking from a base is going to be your best opportunity, not only for achieving capital gains, but also the just the risk reward on this is much better than up here, and it takes less capital. So the whole idea is that you get into a strong hand position, and then you can weather the storm and any of this stuff that happens up here. So that's
It, yeah, show them Google because Google it just broke out of a long-term base.
so Google. There's a couple of bases here. So first of all,
Yeah.
here's a nice, this kind of followed the S&P. There was that one, but also in this kind of shake and bake area here, this is as well, a nice base as well too. It's just that it's it's maybe not the same saucer shape that you guys are used to. But if you start to look for these, they're everywhere. So like Zoom is a good example of this.
Yeah.
Zoom is like down here rolling around in the gutter, but once it gets above and beyond 100, it's probably all of a sudden going to get out on everybody's radar. And so if you get a cost basis of 82 in here, when it gets up to 250 again, you're not going to be able to, you're not going to be sweating if it drops, 10 points in a day. Whereas, somebody that's buying them up here at these levels, it's it takes a lot of capital to acquire these things, and you just don't have the tolerance for loss. So another one that we looked at this weekend was like Roku. Roku, one of the darlings during the COVID years, is building very patiently, quietly building a very nice base. I don't know when it's going to break out. I have no idea. But that's not the point. Your job at this point is identifying things that you believe will be higher priced in the future and dropping your cost basis. Because one of the things that I think we're really finding, and I myself have really found this in the last 3 years, is that options, we get into this mode of selling options, and we sell and we sell, and it's great because the probabilities are in your favor, but they don't carry value. They don't carry
Mhm.
value in a market that's heading higher. And you can be doing the greatest job in the world of creating income, and then meanwhile the market's ripping higher, and you're like, yeah, but I'm making 2%, and it's like, having the easy trades like that to be able to carry value for you on that while you're just playing the wheel for these. So we're
Hmm.
going back to our some of our roots at this point, where we're going to be able to do income, but also carry value is going to be so important.
Yeah, and there's when you see those rounded bases with those kind of you know trigger points where they get above, start to run out. Like there's great opportunities with those for even like you don't necessarily even have to buy the stock. You can buy leaps when that happens. You can put less capital to work. You can do that. You can buy leaps, sell calls against it if you want to create income, and you can sell calls way out of the money. Take advantage of it a little bit, or let it get taken away from you if it gets all the way up there, right? So there's some great strategies to employ, and that's why I was saying like our focus is like how to become better stock pickers, right? For those that are the next ones to go. It's easy to just try to go with the trend and that sort of thing and sell against that, right? You can sell against Nvidia's and all that type of stuff, but man, wouldn't it be nice to get Nvidia when it was 50? That's what we're saying, like, and that's what we're looking to do.
And none of this is really rocket surgery. I mean,
Mhm.
this these concepts have been around for decades.
Yeah.
Of trying to find things when, I think the notion of being a stock picker is that you're really good at doing swing trades. Like when it's going to break out or things like that. And instead, what we're looking at is we want to get into good, high quality candidates that we lower our cost basis on. And so, if we're able to do that, if we're able to play the wheel and sell puts against something for multiple cycles and drop our cost basis, then
Hmm.
we are no longer really care about the swing. What we're doing though is we've dropped the cost basis. Eventually, we get assigned, which is what we meant to
Yep.
do in the first place. And now we're carrying value. Now, there is some risk to the downside with that, but if you do a good job of selling puts against it, you've dropped your cost basis to the point where you're still in the black on the trade. And so
Hmm.
that allows you to, it's all about not, it's all about getting the emotion out of the trade. And there's a lot of
Yep.
different ways to do it, right? So
Well, and patience. You got to
getting a
have
strong
patience.
hand is the way to do that.
You got to have patience because it can take a long time for these things to finally break out. I think Palantir was a good example of that. It was multiple years in that case. So yeah, we're on the hunt for those opportunities and kind of building our watch list off them. So if you're on our services, you guys see that stuff on a weekly basis. But
Yeah, so
yeah.
what you're not going to see us right now 3 years into a bull chasing after some of the big names anymore because
Mhm.
even though there's still some meat left on the bone and maybe the AI thing isn't played out yet, but you're into a very late stage base where it's really hard to be an investor in those at this point. You're merely a trader at this point. You're looking
Yeah.
for a specific swing, take profits, and cut
Yep.
yourself off before you get trapped. You don't want to be the bag holder, right? Up at
Right.
the
It's a
highs.
game of musical chairs at that point.
Oh no, there's no doubt. That's such a great analogy for it. Are there
So,
any questions that we can help you guys with, or any assets you want us to take a look
uh,
at?
well, Doc, throw it up because it's been hammered so much, but maybe it's getting ready to turn around. Throw up Bitcoin and Ethereum. Let's see what those look like for these guys.
All right, let's take a look here.
Definitely have some upside on those today. I think I saw Bitcoin has held 90,000 and gone back over.
Well, okay, so here's Bitcoin, and unfortunately, what it's doing right now, um, I'll tell you what. I'm going to bring this up
It
on
looks
the.
like a bear flag.
Yeah, I'm going to bring this up on the different chart here. This is there's no doubt this is the bear flag right now, and we've got a volume profile at point of control at 96,000, which is going to take an act of Congress to get through. So I believe all the dip buyers are going to get exhausted. There's going to be just a ton of selling up in this area. Former support becomes new resistance. And so what I believe is that we're going to get a flush to the downside, and it may be an undercut. And if it's an undercut, that's actually good news. So an undercut will look like this to begin with, and then it closes the day higher like that. So it'll look like a hammer candlestick. And you can see that we've seen this before. Like if we go back to this spring, we saw a nasty low, reaction back up, and then an undercut, bear flag, tried to break out, undercut. So each one of these was an undercut below the previous low. And what happens is the shorts get destroyed just as badly as the longs do, because every time they go short, somebody's stepping in and buying it. And it just wears out both sides of the ledger, and eventually the price will go higher from there. Now, what we have to avoid at this point is we have to avoid seeing the price drop from here and then close lower. If it closes below this 80,000 mark, if we have a closing candle, it's toast. And by extension, so is every asset in the crypto universe as well, too.
Mm-hmm.
So Dave mentioned Ethereum. Ethereum is closer. It's actually a little stronger today, but that's also a bear flag. We may also need to see that go through its undercut as well, too. So I think we're probably at least a few weeks away from seeing a meaningful bottom, and it's going to be torturous. I very much doubt that we're just going to flow through there unless something happens on Wednesday that gives the market the impression that we're going to be cutting several cycles in a row. If that happens, we're going to see all risk assets take off, including crypto.
Go nuts. Yeah.
But I don't see that happening. I see obfuscation. I see difficulty going forward, and that we're probably going to have a very difficult bottoming formation here, which is going to wear out both sides. But eventually, this may be the result from that.
Yeah, Powell would have to do a complete 180 from his last message, which, I mean, maybe, I don't know. I guess anything's possible.
Maybe it's this. I don't know.
Yeah.
Goodbye, Powell.
Exactly. I don't care anymore. Whatever.
Yeah.
Yeah.
This is not my legacy anymore.
It's not mine anymore. Bring somebody else in. They can handle it, right? So we're gonna let inflation run to the moon, right? So yeah. So we'll see. But overall, guys, I think that's what you watch for. Watch for some chop this week, downside into the Fed, probably some manicness on Wednesday into Thursday. You could see a huge move down Wednesday and then a big move up Thursday, or vice versa, Wednesday, Thursday. Then it'll find some support. That'll get your daily chart ready to go. And then maybe Friday, but I'd say probably next week we start to see a trend kick in, and then that's where you go. That's what you follow. And my expectations to the upside through the end of the year.
Yeah, we go through this every 6 weeks, so it's a carnival every single time.
The market will tend to sell off into the Fed just to scare them to, say, you better cut rates,
put pressure on them.
Yep.
So, okay, guys. Well, thanks for joining us here on another Monday session. We're going to be here next week and maybe even the week after that. And then we're probably going to be off for the rest of the year. So I look forward to joining you guys next week. If you're watching this on a replay, let us know if there's any questions that you want us to address in next Monday's session by emailing support@12minutetrading.com, and we will dig it. All right.
Thanks, guys.
Thanks, everybody. You guys take
See
care.
ya.
Bye now.
Bye.